This is really all you need. This is its own model basically for entry. Like a lot of people are like, I need the model. Where is my model? My PDF fucking model. Where's my PDF? You know, take a picture of this, put it in a PDF, and start taking notes on it. Take a journal of 1,000 trades, and you're going to be ahead of 95% of the people in the smart money space already. Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx. It is officially June 17th, the end of this week. About to go into the weekend with the day off on the 20th. This is probably going to be coming out a lot later, but that's cool. You know, the video is still going to hold its merit with the educational content. As you know, I released them a little bit after. Again, I don't know exactly what's going to happen. This market is live. It's not replay mode right now at all. But as you know, I release everything a little bit after. But today, what we're going to speak about is how the smart money space now has become ultimately major retail, right? A lot of smart money has become straight up retail at this point, and the reality of that happens from this idea of chart porn, right? A lot of people are studying these charts, and they see these cool things on Instagram where you just basically see any entry from anywhere, and when they see that, you know, they want to replicate it, so they start to repost the same stuff, and you just get a clusterfuck of chart porn where it doesn't actually do anything. However, there's a great trade, and what it teaches a lot of people to do is to start focusing on zones like these that don't actually hold any meaning. And what happens a lot of the time is people try to use these to sell, and they become what we like to call liquidity, right? Because we understand above any high or low is buy stop or sell stop liquidity. And in the scenario of price being bullish, we understand that the highs being ran end up being that buy stop liquidity. And as a result, you know, the cool thing about understanding your higher time frame, and this is a post I had posted to Instagram. I spoke a little bit about it. So, you know, if you want to follow me on Instagram and check this out, then that'd be really cool. This is a trade I took personally. I only got one partial on it at this high, and then it came back to stop me out of break even. That's fine. It happens. But notice when you look at this, where my first partial target was, right? And notice how it was targeting this high or the high of this overall supply zone, right? So if we go to a lower time frame, you can see this beautiful supply. Some people might have been watching this supply, but by and large, a lot of people, regardless of what you were looking at there, were either looking at this entire area here as a resistance, right? Whether it be through all these points, whether it be right here as a head and shoulders, whether it be up here as a resistance, or whether it be right here as supply, or up here as a supply, or any of those points, right? And what I basically did in the post that I released is I wrote this little interesting, fun little message right up here that says retail plus, in quotation marks, smart money liquidity. And the reality there is, you've all probably seen it, especially if you've been in the smart money space for a while. What you see now is this transfer from a why-based understanding, you know, with understanding that, you know, not every setup is going to set up, that losses happen, and all this fun stuff. There's been this transfer to here's everything that works and always works, right? So now you have people posting sells off here that worked, sells off here that worked, sells off here that work. And what it's doing is it's programming a lot of people, even within the smart money space, to once again go back to their roots of thinking in this striped pajama pattern, right? No matter what time frame they're looking at. So what's going to happen is, now, as we ride this up, there's still going to be a majority of people that are still looking to short it. Even though, again, this may be correct and this might short, it still doesn't apply, right? And the worst thing that can happen is if this does end up going short right now and starts clearing lows, what's going to happen is those same people that have been considering these points here as valid zones are going to start thinking that they're doing something very correct, right? So what's going to happen is they're going to start to disassociate even further from this idea that price needs to move within structural ranges that then get tested and continue, right? Thereby creating what we like to call the 3-box system. There's a break, there's a new range that we deal with, there's a supply or demand zone that's created that range that we need to find as a result of that. Price comes in, a weak to strong hand transfer, and continues. That's exactly what we see here. We have a higher time frame break of structure to the top side, putting in motion this range right here with the overall higher time frame structural liquidity resting just above this high. Price pulls back into the zone, undergoes a weak to strong hand transfer, and the second basically this price taps here, regardless of what you were looking at in this entire move down, all these points, regardless of the fact that they're unmitigated, regardless of the fact that there's inefficiencies, regardless of the fact that they might look good, end up acting as liquidity, especially if the zone holds, which is exactly what's occurring here. So as this price begins to go higher, you have a lot of this mass retail smart money, a big mass retail smart money area, or what we like to call now is dumb smart money, continuing to force sells into what we now call a bullish market, and basically a market that's been bullish forever, right? This applies the same way to UJ. As you guys know, I've been making a ton of videos on UJ talking about how bullish it is and how bullish we've been and how that bullishness continues to deliver. Similarly, on AU, EU, GU, we've been extremely bearish. Ignore all this, but we've been extremely bearish. We've been following that bearish move down, and as a result, you know, you have a lot of dumb smart money that's trying to catch all these lows as buys and getting stopped out, just like you have right now, even this week, basically, a lot of smart money that, despite the fact, you know, we come and tap into a daily demand zone and begin to hold it, you have a lot of people on a lower time frame, regardless of what time frame it is, 4 hour, 8 hour, 6 hour, 3 hour, 2 hour, 1 hour, even lower, beginning to look at every single one of these zones as valid zones to short from. And once again, you're entering the striped pajama pattern, which is, as we love to say, which is what? It's the idea that because you have a valid zone, you choose to draw it out and you choose to utilize it. And now all you're doing is you're trading a striped pajama or support resistance based mentality. You never know whether you should be actually buying or selling. You're just kind of in the midst of price action, just looking at every single thing. There's no clear bias. Now, what we did in the mentorship and what we spoke about, and you know, this was all done beforehand, of course. It always is done beforehand, but nonetheless, now that, you know, it's occurred, I can now share it publicly on YouTube, and who knows, maybe this does come down. What you see is a very simple approach that I've taught forever and that has never changed. We follow a simple synopsis of structure, S&D, confirm. And that's exactly what I teach in my private mentorship too. There is no disconnect. You're going to learn this at the same level, if not, well, actually at a much deeper level if you join up. Otherwise, all you're doing is you're figuring out how to utilize these three things in an overall system to create an edge in the market and then execute that edge permanently. That's basically all you're doing. So what you need to recognize is that structurally, the higher time frame always precedes the lower time frame. And the second the higher time frame is taking effect, the second the higher time frame takes effect, anything on the lower time frame becomes liquidity. Not every equal high and low that you can spot in the market is liquidity, right? So a lot of people are still, even in the smart money space, going, oh, equal lows, we need to target them, right? Oh, equal lows, we need to target them. Whatever it might be. There's always going to be highs and lows, like I speak about, in the market that exist at any given point. You need to recognize where you are in a structural bias to determine whether or not there's a trade that can be taken within a context. So if we look at this, what we spoke about at the beginning of the week within our webinar. So what I'm going to do actually is I'm going to pause this and go to the webinar that I recorded. 1 second. All right, hey, how's it going, guys? Welcome back. So I brought up the webinar. You can see the post date right here being June 12th of 2022. Which you'll notice is on the Sunday, which is when we always have our webinars. I'm going to expand this now for you, and we're just going to play it for a second. You should be able to hear it. So let's just play out the bias we had for the week. There's the break, right? So you can see how quickly I do this now, but pay attention, right? Price moves down. We look at this high right here. The high is broken. What do we draw out? The S&D that created that, right? Does it make sense as an S&D? Let's check. So what we'll do, yeah, we're still talking about clearing the highs out. And there you go. And we have an overall bias formed by that specific range, right? So now when we go back to here, what you'll notice is that's that same range. That's that same zone. And if we zoom in, what are you going to notice about this last down move before the up move, right? So if we follow this, the last time there was an inefficiency left in the market that didn't tap or wasn't tapped or mitigated, and again, if you don't know what that means, make sure you've seen my mitigation video, that's where we expect price is going to most likely reach into before continuing a bullish range. So what's interesting about this, if we step down to a lower time frame now, right, what we're going to see is that price began to, during this week, break down bearish, right? So from a number of areas, you could have been looking at this as your low. There's some intermediary lows here on a lower time frame, so this was bearish. And at that point, it's actually fine to be short in the market. Of course, I still prefer longs, but it's not wrong to be short. And you can see even during this week, at this break right here, I spoke about going short right here because at the time of going short here, price hadn't yet tapped into our higher time frame 3-box system, which means we had a reason to continue going short. And as a result, if you had followed the weak to strong hand transfer on a lower time frame here and took this to the downside, you had a beautiful delivery to that liquidity low as part of the 3-box system right here. And that's your delivery of that low and the liquidation of those sell stops. And then your tap into the actual demand zone. So again, it's not wrong to be a seller within a bullish market if you understand what your targets are. However, what oftentimes happens and what is probably probably happening now, and what probably happened to a lot of people in the smart money space or even the retail space, is now that we've reached this, there is a disconnect between people and their emotions and their need to see price continue in a given direction. So when you see price come back into this zone, what a lot of people are already doing, right, is they're looking at this supply as well as this supply, or at this resistance and this resistance, or this head and shoulders and this head and shoulders, or this beginning of a channel or whatever other channel, right? It doesn't matter. This is happening across all time frames. This is why I tell you guys and teach you to not think in time frames, because you can visualize price across multiple time frames. So the second this price is tapped into here, and due to our rule of understanding that the higher time frame always precedes the lower time frame, right, is always better, what we need to be aware of is that now that this has taken precedence, the next overall structural liquidity, even if it doesn't deliver there, ends up being the next structure high of this entire thing. And notice how I didn't have to go and visualize equal highs or some equal highs in here, or visualize some equal highs here. Notice how I used the range that we spoke about in that webinar, right? Or use this overall higher time frame rate to determine where my structural high is. And notice now how that same structural high is now perfectly lining up with prior highs, which are now creating this idea of equal high liquidity, which again, you're going to have a lot of retail traders or dumb money or the emotionally weak continuing to hold on to positions that they positioned in here, positioned in back here, wherever, right? With most stops, yes, being above some other highs, some minor highs, maybe some minor highs here, but most stops existing just above this high, which means most of the liquidity present in this market is most likely, and again, I might be fully wrong about this. Again, this is live price. Prices just closed. It's a Friday. But what I presume to be the case is that most highs and most liquidity is going to be resting just above this high, since that's what the higher time frame is telling us, which means that every single zone that had prior been valid as a result of this inside range that broke down, regardless of the time frame you were on again, all of those zones have now become liquidity. So now what you have is, this is where that disconnect between mass retail chart porn and actual smart money begins to become very important, because what you have is you have a handful of mentorships and you have a handful of communities and other smart money technicians, whatever you want to call them, that are now starting to look at all these supply zones as potentially valid areas to be traded from to take to the downside. And now you can see how that can really affect you when you start seeing it work. And like I said before, if you saw this actually work and hold, what you're going to do is you're going to train your mind to think improperly for the rest of your life, right? Because at that point, what you're going to do is you're going to train yourself to only think about zones and not structure. And what that means is in the future, as price does start going short, you're not only going to be able to go short from these areas and might be correct, but you're also going to be looking for these areas to long, these areas to long, these, where is it? Some more unmitigated areas. Let's see if we can find them. These unmitigated areas to long, and you're going to be focused on everything, everywhere, regardless of whether it supports a structural narrative or not. And as you zoom out and notice what you've just done, you're back in support resistance territory, where yes, the zones might work and they might hold and they might do something, but there is no edge being created, right? Notice the difference between this chart right here and the chart that we had presented to you just before we started this entire thing, right? If we get rid of everything here, this is the chart we came into. Right? The understanding is that we've had, sorry, let's delete this. The understanding here now is that we've had this break to the top side. And after that break to the top side, we've created a higher time from structural liquidity that we want to see ran, right? That's it. And that now lines up with whatever might be on the left. And as a result, it's stacking up these points that want to see those buy stops ran, right? Because what's happening is you have people waiting for this breakout here. And at the same time, you have people positioned in shorts all across here. You have very emotional people positioned in shorts, all with their stops protected mostly above this high. Of course, you have people positioned within cells here and here with highs protected throughout here, right? You have people that got in the cells, took their profit because they understand what their targets were as part of another 3-box strategy, right? As part of this 3-box system, and they got out. But most people, especially the emotional, are mostly positioned like this with their stops just above here, right? AKA they're either looking to get out of their cells, so they're buying the market when it gets here, or they're already looking to actually buy stop the market, right? So either way, you have people that want to break out, but you also have people that are protecting above this high and even above that high, right? So the expectation is to see that ran. And you can see how these structural points, as part of a very simple 3-box narrative and understanding of where you are within that 3-box, and then being able to locate that as your liquidity high, lines up with prior points. So again, liquidity is a Liquidity is something that follows this understanding of the 3-box system, not something that you need to actually spot. When you force spotting liquidity, you are once again putting yourself back within that mass retail mindset that had trapped you beforehand, right? And what you're going to see in the smart money space, especially over the last few months, and if anything, it's even more potent now. And again, this is by no means to disrespect anybody, but what you're seeing is you're seeing a lot of new people that don't really understand what smart money is, but liking the hype behind it, trying to teach you basically the opposite of retail, but you're still honed in on looking for the same things that made you unprofitable prior. You're still forcing moves that aren't meant to be forced. You're still looking at ranges that aren't meant to be looked at, right? And what's happening is, despite the fact that price is tapping into a higher time frame zone here, you're still adamant about this supply holding, and now this supply holding, and now this supply holding, and now this supply holding, right? Instead of following the actual structure, which is now tapping into here, showing you wants to go bullish to here, which means now what we have is we have lower time frame setups to the top side, and that's what we want to look for. And notice where my first partial on the buy I took was. The first partial was actually the liquidation of what we could call a supply zone, right? Notice how my first partial right here on this trade was the liquidation of this high, which, if you think about it, is not only a high, but is also the supply zone that a lot of traders are looking to trade, whether it be this up candle right here, this up candle, the body of the up candle, these two bodies of the up candle, just this up candle with the inefficiency, right? But what's funny is, even though the zone is valid, the zone is completely invalid in terms of where we are in the market and its narrative, right? So, and you can see this, as you saw just beforehand, if I showed you the webinar right here, right? We outlined this exact thing.
Overall longs.
We outlined the exact longs we were looking for and how we were going to look for them. We looked at this, we saw it break down, we saw it break up, and we were looking for the longs right here to continue that move up. And guess what? No matter what price does here now, no matter how long it plays around here, no matter what ranges it puts in, right? This price right here could have done this for all I care for 15 months. Right? The second it taps into here, I am bullish on this market. And regardless of how many beautiful supply zones might be on the way up, they are all acting as liquidity. Not only as liquidity for the retail minded or the emotionally incapable, the people that are just looking at this support resistance and stuff, but also the people that think that because there's a beautiful imbalance and because they've been learning smart money for the last month and that they're now ready for the big bucks, that are drawing their zones in just like this and expecting those to be the areas that want to hold price down rather than the expectation that price wants to go up. And that's exactly what you see me targeting here. And as I so kindly noted, this is retail plus what we now call, in quotations, the mass dom smart money liquidity. Because what's happening is, just like a smart money person is looking at this as a supply zone, retail is looking at this as a resistance, as a trend channel, whatever it might be. And regardless of how you're entering this, even if you're confirming it in here or confirming it again in here, right? Your stop is going just above here, or most likely above here, or most even more likely above here to protect the overall move and expect the big shorts. Now again, that's a good movie, by the way. And again, the shorts might come in, and guess what? It might happen, and I could be wrong. But it is important to understand the game of probabilities and how it's meant to be played. And if you get used to seeing this and then taking that lower, and then that ends up being correct, what are you going to do in the future when you have zones back and forth once again, right? The problem with this kind of narrative of thinking is that when this price is coming up like this, what you're also doing, right, is you're trying to force longs now off of this demand, 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 and off of this demand, right? And guess what? Yes, some hold, some don't hold, some get liquidated. The last one holds. Wow, look, the zones are holding. But once price gets here, once again, what's the narrative? You don't have a target now because all you're focused on is zones. So now what you're doing is, even though it might look like it's holding at least the final zone, you're now already adamant and dead set on this being the next zone, and 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 this being the next zone. So now you have you can't ascertain which direction you're heading in, what your higher time frame bias is, where you might be heading, where your actual targets are, and as a result, you can't look to get yourself placed on any given time frame. Now, on the other hand, when you look at this from the standpoint of what we've been showing forever on this channel, what we've been teaching forever, and if you disconnect from all the dog shit that's kind of out there, right, and you start thinking in only these senses right here, Wyckoff, or confirm, right? And you start thinking of only what structural range am I in? Does that support a certain context on a higher time frame? What S&D has created that structure? And is price in that S&D? So can I confirm it with Wyckoff? Is there a weak to strong hand transfer? And if there is, you're good to look for the higher upside potential, or to whatever side you've been looking at. And then you can understand how these points, despite looking like beautiful bearish ranges that are holding absolutely beautifully, right? You can now have an understanding of where to target as highs. And notice how as you do that, right, and price begins to head higher and starts to create higher time frame. Right there, you can see why my entry was here. Again, I'm going to be discussing this in mentorship in terms of why I took it. But as you begin to follow this up, you can now understand where your overall structural liquidity rests. And now notice, all I had to do was follow the structure up and determine this to be the structural liquidity. Why? Because it's within the narrative of the higher time frame. The structure S&D confirm is going to occur for the next one. Again, it might not, but this is the game of probability. That's how we play this game, right? And guess what that lines up with, right? I didn't need to draw this to find that it's equal highs. Notice how this high lines up with this. This is how you can tell when your contextual narrative is right. When you figure out what the next structural high acts as, like this one right here, and then within it, as we get breaks, this one right here, and then the next one, this one right here, and then the next one, this one right here, it's going to more likely than not line up with the liquidity or fake S&D zones or dumb money S&D zones on the other side. And as a result, when you see this break happen here and it becomes bullish and this high is put in motion and that's where you want to see the target, notice how that lines up with this zone and makes equal highs and lines up with the overall S&D zone of the higher time frame with this high. And guess what this high lines up with? This high. And now you have a liquidity portion on the top side, which again, by dumb money is being seen as a bearish market, right? And again, you can do this over and over again. You can do this every week. Notice how we've been, not economic calendar, sorry. Let's go to the community outlook. We love the community outlook, right? And you can now see very quickly how even when you might be studying smart money or thinking you're studying smart money, you're still keeping yourself in the retail space, because as you're seeing this, you're forcing shorts into what? A long market. And again, when you look at the masses of what they're mostly doing, you can see that there's mostly the short side, right? Now, what's cool is if we go over to my channel right here, okay, we go to the community, right? This is what happens when you actually give time to understanding something, right? We've been speaking about UJ forever now. We've been speaking about it being bullish, and I did a little. We have 684 votes here, and we did a little synopsis. We said, what's your UJ history looking like? And I said, been bullish just like your recent videos for the last 6 months, because I've been about bullish for UJ for about 6 months now. That's about 75% of you. That's huge. And then there's people, I don't know why I keep forcing longs. There's 26 people, keep forcing sells, 26% here, right? So it's about 600, 700 votes, which is a really good synopsis, right? Notice how 75% of the people studying within this smart money space here are looking at about an 80%, 75% bullishness on UJ. And then look at something where the studying is mostly around retail or dumb smart money. You're seeing a lot more. That's actually the flip of that on the opposite side. So there's a clear cut difference between dumb money, whether it be on the retail or smart money side, and actual smart money of people that are applying the concepts taught here, right? And what you're seeing is that actually developing into fruition. And we spoke about the same thing on GJ today. We spoke about, don't become the liquidity. Many people worried about SMC is going to stop working. By the way, it's not going to ever stop working. Study the markets for over 100 years, since the 1900s, 1800s. Everything's the same. It's always been the same. So, it's a really bad excuse, right? And also recognize that within the last few months, most of the smart money concept space already became, for the most part, mass retail and is being taught like a mass retail way. And you can see this anywhere. Do not take my word. Do not take my word for it. Go and study any of the other mentorships out there, any of the communities, any of the Instagrams, and notice how some of these moves are drawn. Some of these concepts are taught. It's taught within this retail mindset of the striped pajama, right? And we can go in here and we can go through some of this stuff. And I mean, this is nonstop. I saw it before it happened months ago. It all came from watching all your videos. Only 2 minutes. Okay, cool. I think the best thing someone can learn is knowing the market overall structure, right? It's all about understanding that structure and then following that up with the S&D and confirm, right? What you have is people that are actually beginning to see this way before it happens, understanding when to look for longs, when to look for shorts, understanding how the higher time frame beats the lower time frame in terms of understanding, and then being able to allow that to act as liquidity and not getting trapped by the fact that this looks like a nice inefficiency in a sell place, a nice inefficiency inefficiency in a sell place, a nice inefficiency in a sell place. Now, again, I don't know what this market's going to do, and this is not financial advice at all, but the expectation still stands that I want to see this bullish market right here deliver into the bullishness. I want to see this bullishness deliver, and I want to see it continuing to deliver and taking out highs. Why? Because it's been doing that, and there's no reason it should stop doing that. And I'd rather be wrong at the very end of the trend if it wants to break down than at every single point in the trend. And just like all these people here are trying to predict the last point, the last point, the last point, the last point, more likely than not, you're going to see the liquidation of them. And that's why you're seeing people get bullish on this. And that's why also we teach management the way we teach it, because you can also be profitable and be wrong. If we're wrong now, the day is profitable, the week's profitable. And now the next week, if it begins to set up, great, we can get buys. Maybe we take a loss. Maybe we take a break even. Maybe we take a win and we begin to liquidate even more. Now, again, not financial advice. Most traders lose money. Just be aware of that. Here's your little disclaimer just for fun. Just keep that in mind, right? But the idea is you're going to see over the next few months, or even over the last few months, right, as long as you've been following it, how this mass retail sector has kind of overtaking smart money itself, right? Most of smart money, there's still great channels out there, and there's a ton of mentors that are actually really good within this space. But if you actually study what's going on, a lot of this stuff is now becoming just mass retail based logic. And you're basically putting yourself into the same problem you had before, right? Understand this basic synopsis of a strategy. This is what is taught. If you have channels teaching this, well, great, then you're learning. This is where everything comes from, right? I've spent so much time basically refining this, and it works, right? And you can go and test it yourself. Please do, and then see it happen week after week after week, month after month after month, year after year. Study hundreds of years before, not hundreds, but study the decades of years before and see how it's held for over a century, right? There's only excuses holding you back at that point. And notice how you can confidently begin to target what people may see as supply zones, right? Because a lot of people are seeing this supply and this is supply. People are going short in here, even in the smart money space. People are going short in there without the recognition that we're looking for that higher price action. It's what it's showing you. It's tapped in. It's done. It's weak to strong hands. That's beginning to play. If you didn't catch the trade from here, you can follow that trade up, right? And that's what we're looking for. And that's how we do it. That's how we do it every single week. That's how we draw out these biases, and that's how they're born, right? That's how you see this same thing happen over and over and over again, right? We do that every single week. You can see how we're looking to go short on EU. We've been looking, XXX USD pairs. We've been short as fuck ever since. So I was talking about this with the team. Well, I mean, we've been speaking about this for months on end. We've been short on EU ever since these breaks right here. I remember this because, we have outlooks every single week. And by the way, if you want to join up, the link's just below me right here, or even in the description if you want to join up. Otherwise, feel free to use the free stuff here. So there's your little advertisement and shout out for the day. But ever since this mitigation right here and the absorption and the continuation, we've been extremely short on this market. And since then, there's been nothing but shorts. And since then, we've still been looking for the lows. And again, remember what I spoke about last week. How is that next structural low lining up with the left? There you go, right? You don't need to study and try to find all this liquidity as a lot of the dumber smart money space is trying to teach you to think. Instead, you need to recognize where you are from a higher to a lower time frame bias or basis, understand what the next range is, and then check if that range lines up with liquidity. And oftentimes, more than not, when you do that, for instance, when we look here, and again, this is before it's happened, I don't know if this is going to be correct, but before it happened, right? When you see these ranges present themselves, I'm not going to highlight the exact ranges here. That'll be this weekend in the private mentorship. But when you see these ranges present themselves and they break to the top set and they create these highs of structural liquidity, just draw that out and notice what it's doing. Notice how that's creating those equal highs for, most likely than not, the future to take them out, right? And notice how that's all part of this very basic bias that we sent out. Your trading doesn't have to be complicated. It's cool if you want to complicate it. If your mentorship or your mentor wants to complicate it by creating a numerous ways of basic terminology, like marketing terminology, that's cool. And, all the power to you. There's still a ton of people that I'm sure can find profitability doing that. However, if you take a step back and start to think from a simplistic approach and then test that simplistic approach thousands upon thousands of times for thousands of hours, you will put yourself above about 95% of the people in this space, including the smart money space. Okay. So focus on these three things. Keep them in mind. Recognize how they create an overall bias and how the people that are diverging from this are teaching kind of way outside of these things, right? In terms of like, just follow the BOS. You have the BOS, follow the zone. Follow that zone up, look for your liquidity. As you're doing that, follow the lower time frame ranges. As those ranges present themselves, find the highs that are created as a result of those ranges. As those highs are created to be ran, notice on the left how they line up with supply or equal highs. Notice how that liquidity is put in motion. As it makes a new run, creates a high, pulls back. Look where I'm looking to get involved. Why am I looking to get involved there? 3-box strategy. What's this high lining up with? That's just the normal liquidity. But what does it line up with? All this liquidity here. And at the same time, it's part of the liquidity of the overall S&D zone. And again, it's not wrong to sell this supply when it first got here. But the thing is, a lot of people don't understand is that's your target. Once that's met, this price is ready to fucking steamroll. And since it's hit this zone and it's a higher time frame zone, the higher time frame takes precedence over the lower time frame. So most likely than not, you're going to see the liquidation on the top side. And that's exactly what we saw, right? Price liquidated, gave me my partial. Came right back to break even. Unlucky. That happens. Learn to take your break evens, learn to take your losses. If you can't take a loss, as I love to say, you will never make money in this market. If you're not taking losses, you're doing something wrong. But now just follow it up. Find out what your next structural point is. Let that act as its next structural liquidity. If there's a lower time frame, let's say the market opens next week somewhere down here. Let's say the market opens somewhere down here next week, right? Wait for the market to give you the shift you're looking for. Let it set up for you. Let that weak to strong hand happen. Let it shift. And then allow the 3-box system to work in your favor and allow the next high to act as your liquidity that will then most likely line up with all this supply liquidity that a lot of people want to trade, and let it take that out. Let it, maybe make a new 3-box, maybe make one right here, let it line up again, make all those equal highs, whatever it might be, and deliver to the highs. Now, again, this all might not happen. This is the beauty of trading. We allow our bias to exist and we enter based on the confirmations of that bias. And if we never get that confirmation, we let price do its thing, and then we can change our bias going forward. But also, stay aware of the fact that your trading can be a lot more simpler than you think. You don't need all these weird zones and weird terminology words and all this other shit, right? And you can do this all for yourself at any point. You don't need to be part of my private mentorship. Go and study this and notice it over and over and over again. But do follow my Instagram. There's a ton of great shit over there. Like, trust me, guys. But yeah. This is really all you need. This is its own model basically for entry. Like, a lot of people are like, I need the model. Where is my model? My PDF fucking model. Where's my PDF? Take a picture of this, put it in a PDF, and start taking notes on it. Take a journal of 1,000 trades, and you're going to be ahead of 95% of the people in the smart money space already, because a lot of it has already become subhuman mass retail logic and has diverged already from the smart money space. And notice how we're now looking to liquidate those highs. And it's just the higher time frame 3-box system, right? Box 1. And again, if you haven't seen it, you should definitely watch it. But let's go to the daily. Box 1. Box 2. Box 3. And what do we expect in there? Wyckoff. And if we look at a lower time frame, what do we see? We see a weak to strong hand transfer, right? Wyckoff transfer. Starts breaking, lower time frame structure becomes bullish. So 3-box systems to the bullish side are very much valid and very good. Begins breaking, we confirm those 3-box systems. What are we targeting? We're targeting the liquidity of that dumb smart money and retail, of course, because there's always retail on every side of the market, regardless of where you are. And then what's the overall target here? So we have a great amount of targeting to go. And again, just having this basic 3-box system setup where you understand box 1, box 2, and then confirm with the box 3 inside. And as it begins to move, you understand what your targets are. And as those lower timeframes begin to deliver, you know what your targets are. And as it breaks down, you wait. And as it breaks back up, you know what your targets are. And that's how you create a move. And then what happens? That becomes your reaccumulations that you're trading, right? Those become those 3-box systems. But notice how all those setups are based on the 3-box system, right? Over and over and over again. Don't diverge from this, right? There's always a reason. There's always some kind of new marketing term or something and a reason to make it look like diverging from this is the right thing to do. Or you can take the time to actually learn this, see it over and over again, and then just do it. It's in front of you. So let this video act as its own psychological push for you, if it can. Let it act as a little advertisement in case you want to join the private mentorship. Absolutely amazing. People have been killing it. I love to see it. We're getting funded members month after month after month. Mentfunding's killing it too. Oh, and by the way, if you want to get funded, check out the link above. And other than that, thank you all so much for watching. I appreciate you all more than you know. Leave a like, subscribe, whatever the fuck. Leave a comment. Love to hear from you guys. And I'll see you all in the next one. Don't be the dumb money. Hey, how's it going, guys? As you know, we had a free one-on-one giveaway with me a few weeks back on July 8th, and today it is July 27th. So you had about 20 days to participate in this one-on-one free giveaway. I just ran that giveaway, about 111 of you. So congratulations to everyone that participated, and thank you very much for participating. I know this one was a little bit of a deeper one, and a lot of you left some insanely kind messages and some really cool pointers for other people that might have worked on this. I see you right here. So you won, sir. Congratulations. Shoot me a message on Instagram, or if I don't get to see your message, because I do get a lot in a day, try to contact me through either email, which you should be able to find in my YouTube. Otherwise, just try to tag me in a Instagram story or something, and I'll try to spot it and give you a message. So thank you very much. Your comment, good day, Anton. I'm so grateful for your valuable and consistent content from your past videos. I'm not actually going to read it here. I'm going to read it to myself personally. Anyone that wants to read it can. Once again, thank you so much for leaving this, dude. I can see you learned a lot from that video itself, and I look forward to talking to you in a one-on-one. Nonetheless, thank you all for watching, and I'll see you all in the next video.